What does the market hold for 2023 for mortgages and real estate? So there's a lot of misinformation going on right now in the social media. Will there be a market crash? What will happen to the mortgage rates? Is now a good time to buy? We're going to talk about all those questions today and cover some of those topics. And much of the information I'm going to share with you today is from Barry Habib, industry expert and CEO of MBS Highways, a mortgage and real estate research company that serves this sector. So first of all, what's going to happen to mortgage rates? If you listen to the media, every time the Fed meets, mortgage rates go up. And that's not actually happening. The Fed does not control mortgage rates. Now, the Fed indirectly controls them, and oftentimes that influences rates, but the Fed does not actually set mortgage rates. But what they do is impact the market. So if the Fed actually set rates, the mortgage interest rates would be in the 4s right now. But what they do is they will support the market. So during the pandemic, they actually bought mortgage-backed securities, which lowered the price of the mortgage-backed security, which lowered the interest rates. So now they're actually selling that portfolio of mortgage-backed securities, and that's artificially increasing the interest rates, whereas they were artificially lowering them during the pandemic. So rates are moving a little bit lower now, and that's due to inflation. So inflation drives mortgage rates much more than the Fed does. So when the inflation is higher, the cost of living goes up and the cost of goods goes up, and so do mortgage rates. And as inflation comes down, so will the mortgage rates. So right now we're seeing the inflation rate fall because it's based on a 12-month consumer price index. And 12 months ago, the inflation rate was much higher. And today, in the last 3 months, we've seen the consumer price index for the monthly rate drop and drop and drop. So the overall inflation rate is dropping as well, and that's dropping interest rates as well. So we're seeing rates that were as high as 7% now. I'm quoting rates in the 5s right now. So it's a great time to go ahead and start looking at your home purchase. So how is inflation calculated? So basically, again, the consumer price index is calculated, and then over the course of 12 months, each month is replaced with a new month. So it's kind of easy to predict where inflations are going. And as those higher rates on the last or a year ago are replaced with the new lower rates, we can see inflation falling and interest rates falling. So why are the rates so high right now? So that's a great question. And the reason the interest rates are so high right now is because when an originator originates a mortgage and then sells that securities, and then a loan servicer buys that security to service the loan, they're not willing to pay very much for that mortgage because they know they're only going to be able to make money on it until the mortgage rates drop. And then that loan will get repaid with a refinance. So they're charging almost double of what they normally would charge to service those loans, and which is artificially inflating the mortgage interest rates at right now. So as inflation drops, we're going to see that go away, and then those margins will return to a normal rate, and we'll see interest rates falling probably into the low 5s by the end of the year, maybe even into the 4s. So what's going to happen when mortgage rates drop? So that's one of the most important factors right now. So when mortgage rates drop, all those people that were afraid of buying when interest rates were in the 7s are going to come back into the market. And then you're going to see competing again for the good houses. You're going to see over asking again because there's just so many people that are still wanting to buy but just took a break because the interest rates were a little bit high at the moment. So right now is a much better time to buy. A lot of the contracts I'm seeing coming in have seller concessions where they're paying some of the closing costs. They're getting under asking price. So it's a great time to buy. And then next year, when the interest rates are coming down, we will use our mortgage rate protection plan to help you get a lower interest rate by refinancing you into the lower rates and we will waive all of our lender fees so that we can help you save money on that. The Dallas and Fort Worth market is not the same as every other market in the country. There's a much higher demand for housing here. There's many new families being created by the 30-somethings that are getting into the market of getting married, creating families. They're moving out of mom's and dad's house. So the market will remain strong. You won't see as much of a price increase as you've seen in the last couple of years, but you will see a price increases still moving forward, just returning to a normal pace of 3 to 4%. So if you're interested in buying a home and you'd like to look at getting pre-qualified, see what the interest rates are for you, what your payments would be, we can do a pre-qualification for you with what we call a soft pull. So that means that we're not going to impact your credit score until you are under contract and ready to go into your house. So thank you. Give me a call today. We'll give you that pre-approval and let you go out and go house shopping. Call me today at 214-945-1066 or apply online at mortgageprosus.com. We're here to help you make you a homeowner and create wealth with mortgages.